The differences in insurance companies are what we're going to discuss here on this video. For compliance reasons, I can't name insurance companies here, but there are a number of different models of insurance companies, and those differences can have a significant impact on your life insurance and how it performs, and whether it is a good choice when it comes to infinite banking. Aloha, I'm Stan Cox, Principal Broker and Strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Freethinkers Academy, a nonprofit financial literacy education organization. For the past several years, I have focused on and specialized in the infinite banking concept and the tax-free cash growth warehouse finance strategy. And if you find this to be helpful, please like this video and subscribe to this channel. Also, please post your questions and comments here. Now, as an independent broker, I am appointed by several insurance companies, so I have experience with a number of different company models. First, I want to talk about third-party ratings of insurance companies. The primary independent ratings companies or agencies are Moody's, Standard & Poor's, AM Best, Fitch, and more recently, the Comdex. The first four I mentioned here rate life insurance companies based on a number of different criteria. Of course, of high importance is the financial strength of the company. Another is the company's record of servicing claims, that is, paying the death benefit. And another is the overall reliability of the company and how accessible and accommodating they are for their clients. Each of the four rating agencies use similar but slightly different ratings. That is, the top rating for AM Best, for example, is A++. Moody's top rating is A AAA, as is Fitch and Standard & Poor's. And that's not that confusing, but as the ratings go lower, it does get a little confusing. For instance, Standard & Poor's third best rating is A. Fitch's is A+. AM Best is B++, and Moody's is A. So the Comdex came out with a number rating to make it all uniform. Their top rating is 100, and it goes down from there. They look at the ratings assigned by the other four agencies, and based on those, assign a number on their scale. To get a rating from Comdex, a company must have ratings from at least two of the other four rating agencies. The differences that affect us as clients who want to incorporate infinite banking tax-free cash growth warehouse strategies are more of the product and policies type that govern use of the products. These differences can have a big impact on the viability of the product for use with infinite banking. First, there are two types of companies that offer whole life insurance. There are stock companies and mutual companies. Stock companies are owned by the stockholders who purchase shares in the company, and as such, the company's priority is taking care of the stockholders. Usually, stock companies do not offer participating whole life insurance because, again, they need to take care of their stockholders. So they don't share their profits with the policyholders. Mutual companies, on the other hand, are owned by the policyholders. In effect, the policyholders are their shareholders. So mutual companies do offer participating whole life and do share their profits with the policyholders. They share their profits by paying dividends to the policyholders. They do that either by paying into the cash value of the policies and adding paid up additions, or the policy holders can choose to have the dividends pay part of the premiums for their policies, or they can choose to have the dividends paid directly to them by check. That is why mutual insurance companies are the preferred choice for infinite banking accounts. Then there are insurance companies that are focused on selling term and universal life insurance and other products such as annuities and other retirement and investment plans. None of those products are suited for infinite banking. Insurance companies that focus on those products do so because they are the most profitable for the insurance company. By far, the most term policies never pay out a death benefit because the policy terminates before the insured person dies. Then, after one or two renewals, term insurance policies become unaffordable for most, and term is completely useless for infinite banking anyway. Universal policies have fees attached to them, which the insurance company can increase at will, and because they're based on term, many universal policies lapse without paying out any benefit as well. Again, very profitable for the insurance company, but not suited at all for infinite banking. Some insurance companies and agencies are set up similar to pyramid marketing programs where agents are in a downline and commissions on cases are split and paid to multiple people in those uplines. Of course, those companies and agencies are mostly selling term and universal, but unfortunately, the way they present their universal products are often in a way that makes them sound like whole life insurance, which they are not. But unless you are well versed in the differences between insurance products, you wouldn't know what questions to ask to enable you to make the best decision for you. Bottom line is, if you want to have life insurance that will not disappear on you or have a huge jump in cost of premium every so many years, you want to make sure it is whole life, not term or any kind of universal, not IUL, not variable premium life, which is universal life, not variable universal or VUL. And if you want a policy that will not disappear on you and is set up for infinite banking, you want a participating whole life with a mutual company that is designed specifically for the infinite banking tax-free cash growth warehouse strategy by an experienced infinite banking specialist. There's another difference that I feel is important to mention, and that is how the insurance company treats policy loans, which is a critical part of the infinite banking TFCGW strategy. Some companies have what is called a direct recognition policy, and others have what is called a non-direct recognition policy. When a policy loan is given by the company, the loan is not coming out of your cash value account, but is funded by the company. But companies with a direct recognition policy treat it as though it did come out of your cash value. In other words, if you take a policy loan of $1,000, then $1,000 of your cash value account will not receive any dividend interest until that loan is repaid. Companies with a non-direct recognition policy continue paying dividend interest on the whole amount of your cash value, regardless of how much of it you have leveraged with policy loans. Connected with that subject, different mutual companies pay dividend interest at different rates because it's dependent on their profitability and what their board of directors elects to pay. And each company has its own policy loan interest rate. For infinite banking, you want an account with a non-direct recognition company that has a low policy loan interest rate and pays the highest dividend interest rate. So if you are considering incorporating infinite banking and the tax-free cash growth warehouse strategy in your financial life, then you really should schedule a call with me on my Calendly page, and together we can determine if it is the right move for you. The link to my Calendly page is in the description box below. If you have found this to be helpful, please like this video and subscribe to this channel. Also, please post your questions and comments here. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below here. The link to buy my books on Amazon.com is also below. Again, if you'd like to book a free phone consultation with me, the link to my Calendly page is right below here. And if you'd like to apply to become a client of ours, the link to the application is. We're here to help. We look forward to helping you. Aloha and mahalo for watching.